You're going to hear a lot about the manifesto and that exclusive interview of Network 18 with the Prime Minister. But for the moment, good morning to all of you. Welcome to Bazaar. The cues from the global markets are looking a little dull. It's the start of the earnings season in the United States as well, and this is one of those earnings seasons when results are going to be tepid. So that could perhaps explain as well for us the other double whammy, if you please, is that crude has climbed on now to $71. I mean, it's not all hell breaking loose, but it's a little worse than the 60, 65, 68 that we were used to for the last 3 months. So it's a little higher. You could see, therefore, pressure on yields and on financials. On the other hand, my point is, did we already precede that fall? Because yesterday the Nifty went below the 10,600 mark all the way to 11,600 mark, all the way to 11,560, and saw a fairly decent comeback in the last 10-15 minutes of trade. So I would want to know from Anuj whether that's a reasonable support level. Also, we may have preceded the global fall, and therefore that we don't have to freshly discount the negativity that we are getting, except from crude, which is, of course, a bit of a bother. Morning, both of you.
Hi, Lata. Good morning. Yes, a bit of a bother. Anuj, morning to you as well. Highest in the last 5 months, right? The move on crude. And it's because of those tightening of supplies in the Libyan market. That's something that's kept crude afloat, at least in the last couple of days. The Dow was also down. The Dow was down almost about 90 odd points. Asian markets like Nikkei are under a bit of pressure right now. In terms of numbers, FIs bought in the market yesterday, but domestic institutions actually sold about 624 odd crores. So that's something to keep on our radar. And, you know, this theme of macro slowdown is something that, of course, we'll take forward. But just a couple of data points. This morning, CLSA has downgraded Asian Paints. They say that the only reason they've downgraded is because there is a risk in valuations in context of a macro slowdown. So that's one. They're talking about a macro slowdown. And Siam yesterday, of course, it came during noon, but Siam has downgraded the FY20 auto growth forecast for the entire sector to single digit. And they say that passenger vehicles will grow only 3 to 5% in FY20. So there are some growth scare issues, and a lot more, industry experts are talking about it now.
If Siam says it, because they speak for the industry.
Yes, and they've downgraded for all the pockets, for commercial vehicles, for two-wheelers, etc. But for passenger vehicles, it's the starkest. Just a 3% growth is what they're expecting next year. But Anuj, morning. What do you do in this market where you are sort of, facing a bit of a hurdle at the all-time high? Does it still make sense to buy on dips, or should you change your strategy a bit now?
Morning. Let's look at some internals first, and then we'll talk about the strategy. I think this month the market's given you enough indications, like we've been discussing, money moving from banks into other sectors. IT has made a strong comeback. IT index is up 2.6% this month. The bank Nifty is down 1.9%. And what that has meant is that the Nifty is absolutely flat. So, the market's not obliged to just keep going up every day. So that's happening. Even if you look at individual stocks and the way we have seen individual stocks move, Yes Bank, ICICI Bank and Axis Bank, they've all corrected this month, anywhere between 3 to 5.5%. On the other hand, I'm not taking Tata Motors because that's a different ballgame altogether. But Maruti is up 7%, HDFC is up 4.5%, and TCS is up 3.5%. So money is moving from banks into IT for sure, NBFCs, at least the good ones, and some auto names. That's what's happening in this market, which is not a bad thing actually, because Bank Nifty needed some cool off. Now, in terms of levels to watch, for the Nifty, I think we are beautifully poised. Current level is 11,600. Yesterday's low was 11,550. And the 20-day moving average is 11,500. So, give or take 30 or 40 points, the risk-reward, again, would be turning in your favor if you start to buy somewhere around 11,550 to 11,500, with that 11,500 as your stop loss. If you look at the Bank Nifty as well, that's also seen enough consolidation. The moving averages have now moved up. So the current level is 29,845. Yesterday's low was 29,717. And the 20-day moving average is 29,650 thereabout. So once again, in terms of risk reward, we are moving very close to important support marks. Let's see if this mark is respected or not. Crude, I think the market needed a trigger. It could have been anything. Previously, it was SkyMed, it's crude or whatever. At higher levels, with the way market was, it needed some correction to sort of lead to a decline. That has happened. And like I said, the real test will be now, because now you will test the 20-day moving average. Till now, the market had just expanded way too much. So I won't give too much importance to the last 2 days fall. But if you start to break 20 DMA, that's something that I'll give importance to, especially because even the FII data after a long time is turning slightly bearish. Not extremely bearish, slightly bearish. They've sold futures, they've bought puts. In calls, the data is mixed. To cut a long story short, if we don't see follow-through selling below 11,500, I think we should expect short covering. If you break 11,500, perhaps then the market has some decent correction. Overall, the buy on dips texture hasn't changed. All it will require is just 1 or 2 days of big buying in global market, and all the texture will once again change. So I think as of now, buy on dips I think is still intact.
Okay, the buy and dip strategy is still intact, but let's do one thing. Let's tell you what our wise experts have to say as we head into trade this morning. Surendra Goyal of Citi says he expects the Sensex earnings to grow 28% year-on-year in the fourth quarter, while Nifty earnings are expected to grow 23% year-on-year. Excluding financials, he believes the Sensex earnings would fall 4% year-on-year, while Nifty earnings would fall 2% year-on-year. Apart from financials, Citi expects earnings to remain weak for a second consecutive quarter in consumer discretionary and commodity sectors. They see an 8 to 13% year-on-year growth across most of the rest. Citi says industrials are the lone bright spots owing to decent top line and margin expectations, with a 20% earnings growth expected.
Okay, not looking terribly good, but we will analyze in our QSQT Quarter Se Quarter Tak segment starting tomorrow what the earnings season will look like. Here's some more equity opinion. Meanwhile, Bijay Kumar of Deutsche Bank says they expect Q4 FY19 to be a muted quarter for large cap Nifty earnings growth. Aggregate revenue and EBITDA are expected to increase 4% year-on-year, while net income, that's their meaning of profit, is expected to rise 6% year-on-year for Nifty companies. Financials and IT services companies are likely to report relatively higher earnings growth, while expectations are low for telecom, materials and consumer discretionary companies. Deutsche Bank expects median earnings growth for the broader Deutsche Bank coverage universe to be 8% year-on-year. So finally, we get to high single digits.
Okay, high single-digit earnings. Let's see if it actually plays out. But yesterday was a weak day for the rupee. So we'll just pull it up for you. 69.67, that's where it ended. About 44 paise lower than the previous day. Some money market views for today. Bhaskar Panda of HDFC Bank says globally, crude prices rallied higher, bringing pressure on import-dependent countries, including India. The USD INR made a sharp turnaround from the technically important level of 68.80 and traded above 69.50 yesterday. He expects the dollar INR to trade in a range between 69.45 to 69.70 for today.
Today there are contrary pressures. The dollar has weakened a little bit, just a little bit. Flat to a little bit, and the crude price is higher. So we'll have to see which way the pulls happen on the dollar rupee. But a little more on Indian bonds, and they didn't have a very good day at all yesterday. Bhaskar says they also made a turnaround after the Reserve Bank policy announcement and higher oil prices. He expects the 10-year benchmark bond yield to trade within a range of 7.4 to, I think, 7.45%. It can't be 6.45. It should be 7.4 to 7.45%.
Okay, global Q slightly weak today. Here's Nigel with the world view.
Well, that's right. Global Q is slightly mixed, actually, because the US markets, the Dow ended in the red, but the other couple of markets, they managed to eke out some gains. Why did the Dow end in the red? That's because Boeing, that was under some pressure. We did see a downgrade that came in, overnight. And not just that, even the company has said that they're looking to cut production by around 20% on the back of the Boeing 737 MAX crash that we had a couple of weeks ago or so. So that stock was under pressure. And if you had removed Boeing from the Dow, in fact, would have ended in the green. Even General Electric was under pressure. That's because we had a downgrade coming in. JP Morgan believes that, in fact, the street is not really factoring in the risk, but they're factoring in all the profitability. In terms of US data, well, the factory orders were down by close to around 0.5%. And that indicated that some of the data points coming out in terms of US economic data, not very, very great. Shifting focus to the European markets, though they ended mixed, the DAX was a relative underperformer. You had data coming out of Germany in terms of their export and their import data. There was a higher than expected contraction. And on the back of that disappointing data, that market, in fact, did see some selling. Asian markets, well, they are in the red today, all those Asian markets. But the big focal point really is crude. And Brent crude prices continue to move higher. The Libyan conflict, there's a bit of an escalation out there. OPEC-led production cuts. And finally, US sanctions on Iran as well as Venezuela. That's what's caused Brent crude prices to go to $71 per barrel. Though the dollar index, that's cooled off from around 97.3 to around 97 odd. So we'll keep an eye out on the rupee today. For starters, the SGX Nifty is indicating a start as flat as can be. Back to you guys.